What's up, everybody? Welcome back to the Inside View Real Estate Podcast. Today's episode is going to talk about the truth on interest rates. Stay tuned. Good morning, good afternoon, and good evening, and welcome back to the Inside View Real Estate Podcast. I am one of your hosts, Josh Zuniga. I'm here with my fabulous and miraculous co-host, miraculous Carl Freund. And we are back talking about interest rates and the truth about what everything involves with the interest rates, right? Correct?
Yeah, absolutely. We're going to, I mean, there's some myths and some legends and some things that we kind of need to dispel. And we brought somebody that you know very well here.
Absolutely. This is a very, very exciting episode, guys. I actually have the opportunity to bring in my older brother, the handsome and miraculous also. I lost the word on that one. Leo Zuniga. Leo, he's been a big mentor of mine, especially in the real estate industry. He's been in lending for, 20 plus years, 21, 23?
21. Why you gotta age him like that, bro?
Yeah, I always say 23. No, but he looks great. He looks like he's 31.
Look at the hair on these guys.
All right. So he's been such a wealth of knowledge, and a lot of the clients that we worked with together, they also go through Leo. They go through with our parents for the credit reporting agency, but Leo has been a wealth of information and education for me, and we just want to bring him in here on the podcast to really kind of bring in what is the truth about interest rates, because a lot of people are saying, hey, you get advertised interest rates of like 2.5, and that's not really what the interest rate is, for that person. So Leo, give me your take on what the truth about interest rates really is.
Truth and lending,
sure.
right?
Truth and lending.
And lending, yeah, there was that form that went away, but truth and lending.
Yeah.
Thank you guys both for having me. First off, it's an honor. It's fun. It's a lot of high energy in
this
here.
This is exciting. Yes,
it is. It's exciting. So thank you both.
Yeah.
With respect to the truth about interest rates, what you see on TV and or the tabloids or the internet isn't always, what it seems.
Right.
You do see these high-end big companies advertising rates that are just rock bottom. You call it, 2%, 2.125%, 2.5%, even right now. But they don't actually really tell you what it's going to cost to get that rate, because nothing's for free.
Mm-hmm.
What they really should be asking, if you're that borrower, is what am I going to get for an interest rate if I don't want to pay any points? Okay, without getting too deep into it, paying points is what it's going to cost to get that rate. AmeriSave, can we quote companies?
Yeah, of course.
Yeah.
Okay.
Call them out.
Yeah, go for it. Yeah,
companies
everybody,
out there, Quicken, you see all these companies out there quoting these ridiculous low rates. However, what's it really going to cost to get that rate?
Yeah.
Even for myself, if I've got a very excellent credit score, what's it going to cost me? Because it's still going to cost me something. Nothing's for free out there.
Mm-hmm.
So if you're a home buyer or a client that's looking to refinance and you're shopping interest rates, you want to really truly find out what it's going to cost to get that rock bottom rate. Okay, now there were some clients that I did, lock historically below 3% and below 2% for a 15-year and a 30-year.
That's amazing.
Individuals still had to pay that fee. People asked me, well, why am I paying this point? Like, that's what it costs to get that low rock bottom rate.
So what is a point? Like for our
So,
audience,
for
describe
example,
what a point is.
prospectively speaking, if you're financing $200,000, 1 point is $2,000.
1%.
Okay, so it's
Okay,
1%.
1% of your finance loan.
Okay, good. That's definitely
So
a
2
key.
points, 2%, 1.1%.
2 points would be $4,000.
Of the loan
correct.
amount, not the purchase price.
Of the loan amount, correct.
Yes.
Correct.
Yeah. So that's a big one. And guys, that's some very, very valuable information, because, when I speak with my clients, it's like, oh, I want to go with this lender. I want to try that one. They're trying to shop, and they're always like, well, they can give me a 2.5. I was like, well, and I'll have you guys touch on this. Carl used to be in the lending industry as well. Used to have your
I used to own my own mortgage company.
Yeah, because just because it's advertised as 2.5 or 3%, you still have to pull your own application. You still have to pull your own credit score, and if you don't have premier credit and a good ratio as far as your debt to income, your book, I guess, of what you are, or as far you are as lending, is not going to actually achieve that rate. Is that correct?
Yeah. So Leo, let me ask you a question very directly, because underwriting guidelines have changed substantially since I was in the game. About 13, 14 years ago.
Yeah.
But let's say, Quicken or Rocket Mortgage, aka failure to launch mortgage.
Come on, man.
Come on, dude.
Yeah, for real.
They suck.
No, I'm for real.
I mean, they're horrible. And that's my opinion, not fact, right?
Yeah.
Don't sue me, Rocket Mortgage.
That was a joke.
Yeah.
Disclaimer.
Yes, yeah, disclaimer. But no, seriously, they always quote the best case scenario, right? So
Yeah.
what is that best case scenario? What credit scores do you need? What down payment do you need? What type of house do you need? What loan amount do you need?
No, that's an excellent question. So typically what they're quoting out there is the best case scenario. So it's somebody who's got a 740 FICO score or above. somebody who's putting 20% down and on a conventional loan with everything that's been verified for them. Okay.
Yeah, so
single
credit,
family
income,
residence, correct. Credit,
reserves,
everything.
Yep.
You know, it's going to change if we're looking at a condo. It's going to definitely change drastically if we're looking at a manufactured home.
Yep.
It's going to change if it's a multifamily unit. You know, there's certain parameters that are actually being out there and advertised, but when you call in and give them your scenario, hey, I've got a 635 FICO score, you know, it's a manufactured property that I'm trying to refinance, I'm trying to pull cash out, all these different things go into play. So now you're, well, we got to actually change this because now you've got all these different features and or credit adjustments based on what you've just said to me. So if somebody could see, you know, let's just say for right now, 3.25%, okay, which is around where the rates are today. They're not just going to get 3.25% if they've got a 621 FICO score with no money down. It's just not going to happen.
Absolutely not. Yeah.
Okay. Now they're telling me that they need down payment assistance, which is probably a whole nother topic, but those are also rates that aren't even controlled by the market. Those are actually predetermined by the program itself. So now we're talking 3.5, 3.625, 3.875, depending on how much assistance they're actually going to be asking for. So to answer the question, yes, those parameters are advertised on the best case scenario, 20% down, highest tier credit score, single family residence, conventional loan.
All right, cool.
Okay.
So like if I'm a consumer listening to this podcast right now, what can I do personally to get the best rate? Like what are the, you know, going into, can I negotiate the rate? Number one, can I negotiate fees? You know, like what can I negotiate as a consumer? Because I feel like I just walk in and they just take my order and they give me a ticket and wait in line. Like that's not fair. Like I feel like there's things that I can do in today's market right now that will at least help my chances of getting a better rate. Like
Sure.
what are some of those things?
So you want to actually do your homework, do some research, okay? If you are rate shopping, you want to rate shop who you're going to be dealing with, okay? If you're going to be rate shopping with Chase or Bank of America, your big name brand banks that are out there on every corner, okay, you're going to be waiting in line for a little bit, okay? You may get an answer on a quote online, but that doesn't pertain to anything having been verified. They haven't pulled your credit. They haven't actually looked at the property. They don't even know what's on there. You just went in there and put some tidbits, but it's not giving you a full rate quote. So as a home buyer or homeowner who's looking for a rate shop, you want to, have a full grasp on your credit score, okay? If you've got a 620, you know you've got a 620, okay? If you've got a 780 plus, you know you have stellar credit. You know you want to come in with that question knowing that that's what you're going to give this person before they actually run your credit, okay? You can even tell them, look, I know for a fact I've got 780. I want you to run that scenario before you pull my credit because we all know inquiries can hurt somebody if you start giving it to everybody out there,
Yes.
right? You also want to give them the details of your finance loan amount, okay? You want to look at your balance and say, okay, this is what I'm doing. If you're going to pull cash out, you want to tell them, well, I want 30,000 cash out. So you want to give that to them as far as the perspective. You also want to know your home value, at least have a general good idea, okay? Zillow, a lot of people go to. It's not one of the best platforms, but you can start there, okay? You want to know your home value, okay? You also want to know if you're going to be coming in with down payment, okay? If you don't have a down payment, you need to start asking about down payment assistance. But if you know you're coming in with 5% down, 10% down, 20% down, whatever, give them the full-fledged scenario so that you know what rate's going to come back for you. Because if you're a first-time home buyer and you want to do 3%, that rate's going to be different significantly than if somebody's coming in with 20% down.
A stronger buyer.
Why
Stronger
is that
buyer.
though? Like why is that?
The bankers, on the pricing, when they're talking with a lock desk, it's all based on risk, okay? So if you've got somebody with 20% down, they've got a lot of equity. They've got a strong foothold in that transaction. So they're going to entice them with a lower rate. When you got a first-time home buyer who's never purchased, who's never owned a mortgage, who's never had any kind of commitment like that, and they only want to come in with 3% down, you got to ask yourself, would you lend that person that much money? Would you give them the rock bottom rate? There's going to be risk layers that are, impacting that rate. So that's why it's different for everybody.
Yeah. And that was huge information. And as you can see, everything is case by case basis, from when you're going in. And especially if you're a first-time home buyer or you're looking to get into your second home, you need to speak with a lender that you, one, trust is probably the biggest thing that can run your scenario and let you know where you're going to be and what are your actual goals as far as what you're trying to achieve if the rate is actually what you're wanting to do. First-time home buyers, especially right now, there's another podcast we're going to put out. Please listen to it, We're going to dive into it as far as exactly what is needed to qualify for that. And there's even like minimum requirements. So like, Leo, give a little explanation on what's the minimum requirement for like a credit score here within the market for conventional FHA and some of these programs too.
So just across the board, a minimum requirement just to be eligible for financing is to have a 620 FICO score.
Okay, 620 guys, pay attention to that.
620 FICO score, minimum down 3%, 3.5% if you're going to the government side, FHA. Okay. VA doesn't require any minimum down payment, but same thing, 620. Okay. Now on the convention or the government side, they're a little bit more lenient when it comes to the rate. You just have to have that 620. But again, the top tier rates are going to go into a tiered category when you're going conventional.
Yeah, good. And you guys can probably touch base on this too. Like, how are the rates really determined? Leo, I know we were talking about it, like as far as, how often do they change and where do they come? Like, how is the markets, how do these rates actually like come about?
So
how do they change too?
Without getting too technical and creating a whole nother episode, they really follow the bond market, okay? The 10-year T-bill, okay? And that's an indirect effect. If the bonds are rising, rates are lowering. If the bonds are lowering, rates are increasing, which has been happening recently, okay? Now, there's a multitude of different factors that go into this as far as the market is concerned, because not just that happens, okay? But that is the number one indicator that we watch, okay? And rates change every 2 hours. 8 a.m., 10 a.m., noon, 2 p.m., and 4 p.m. is the close, okay? So if you're out there shopping and you want to watch the parade go by holding out for a lower rate, it could go up on you, okay? As I have a lot of clients right now that want a rate in the 30-year fixed below 3%. I can't promise that right now. We're in a rising rate environment, and I can't tell them that we're going to get below that. It's costing them more as time goes by. Yeah. So they need to be paying attention as to who's going to be watching this rate for them, and are they going to watch it like a hawk? Because they could already have lost out.
Yeah. And explain exactly what locking in a rate is for buyers that are coming in. It's like, all right, you got a house under contract, and then you're already going through the process, and you're just like, hey, do you want to lock in your rate? What does that necessarily mean to like a consumer?
So what that technically means is, are you ready to lock in and commit to the terms that have been presented to you? Okay. And your lender will have already presented something, so you will have the option to lock in, and or you can roll the dice, which I don't typically recommend because it can go up or down for you, okay? Now, I always recommend if you're comfortable with the terms and you're okay with the rate, because they are still historically low. No matter what you say, they're still historically low, then lock in. Because now you can be comfortable, that's going to be my payment, these are going to be in my budgets that I can count on. If you want to roll the dice, then you got to be ready for that other side of it, okay? With respect to locking in, you can only lock in when you got a contract if you're a home buyer, okay? If you're refinancing, you can lock in as soon as that application is taken. As soon as everything has been given to your lender and they have your application with your credit pulled, you can lock in.
That can make a big difference. Yeah,
can definitely.
Yeah, and obviously, Carl, you've been in the industry, quite a good term as well.
Thank you.
You said you want to date you, so anything. But what do you guys feel like? And I'll touch with you on this first, Carl. What do you think interest rates are going to be doing? Throughout 2021,
going up.
Yeah.
No, look at inflation, right? Yeah. So and guys, lock in now, because projected inflation for 2021 is about 2.25%, which is historically very high for the last decade, right? And so if they're going to give you a loan at 3.125% and the inflation rate's 2.25%, your effective interest rate is less than 1%. Do that. Lock it in. Don't even think about it. Just lock in. You don't try to time the market. You're going to get your ass kicked.
Yeah. And I think a lot of people are starting to get scared. Oh, the interest rates are above 3. I was like, guys, 2 years ago, I was excited for 4.25.
When I started, I was excited for 9.
Yeah.
Yeah. Legitimately. We saw 9s and we're like, oh shit, it's go time.
The game's changing, right? Yeah. The game's changing. So guys, Leo, that was some amazing information, on interest rates. I think that really probably answered a lot of questions. It answered even a couple of more of my questions and touched base, on a lot of things. Guys, if you're listening to this podcast and you're worried about interest rates, rising, hey, trust me, they're still going to be low at a historic low for the last 50 years. Mm-hmm. Even when they're both going into 4s, that's still low. That's still a good rate. So this, what Carl was saying, lock in, but make sure you talk with a wonderful lender that is educated on all the scenarios for what you guys are going to be doing. If you're able to achieve one of those amazing rates that are below 3 or below 2, and you can do that, awesome. If not, let's definitely look at your scenario and see what we can do to get you the best rate possible for what you're trying to do with your home purchase, your loan amount, your credit score, especially. We're going to do some more, podcasts on that. But until next time, guys, I want to thank you so much for having Leo on this podcast, talking about the truth about interest rates. Stay tuned because we're going to talk more about lending. And this is Josh Zuniga and Carl Freund on the Inside View Real Estate Podcast. Take care, guys.